Are you worried about your finances during a recession? Don't despair. While economic downturns can be tough, there are practical steps you can take to weather the storm and even position yourself for long-term success. In this video, we'll share some tips on how to reduce expenses, invest wisely, and take advantage of available resources. So sit back, relax, and let's explore how you can navigate a recession and come out stronger on the other side.
What I can tell you is the economy does not look great right now. Things are slowing down. You're seeing layoffs in many sectors of the economy. People are slowing down. The probabilities say if we're not in a recession right now, we're likely to be in one very soon. So my advice to people, whether they're small business owners or, is take some risk off the table. If you were going to make a purchase, maybe slow down that purchase a little bit. If you're an individual and you're thinking about buying a new, large screen TV, maybe slow that down, keep that cash, see what happens. If you're a small business, maybe delay some capital purchases. Do you really need that new piece of equipment? Maybe it could wait a little bit. Have some cash on hand. Just a little bit of risk reduction could make the difference for that small business if we do get into even more serious economic problems. So you got to play the probabilities a little bit. Be reasonable about it, take as much risk off the table as you can for yourself. Hope for the best, but prepare for the worst.
Firstly, during a recession, it's important to reduce expenses and save money wherever possible. This means cutting unnecessary expenses such as eating out or buying luxury items, and focusing on needs rather than wants. It's also a good idea to create a budget and stick to it, and to look for ways to reduce bills such as negotiating better rates for utilities or insurance.
I think yes, the ability of an investor to think longer term. And this is one of the reasons why the index does so well. The index is too dumb to know that it owns Microsoft. It's too dumb to know that it owns Alphabet. And it's too dumb to sell these things. And it keeps these things endlessly forever. We look at the S&P 500 index, for example, which is 500 for the most part great businesses. And every year they might take one or two businesses out and replace them with one or two new ones. But usually the ones they take out are not the ones that are climbing. Like recently they removed General Electric from the Dow Industrial Average. And if you look at the Dow Jones Industrial Average over time, in general, you get rising stars going in and you get companies that have passed their prime being taken out. The S&P 500 would hold an Apple or a Microsoft or a Amazon or Alphabet for 20 years, 30 years. And that type of holding period on these great businesses can be a great edge.
Secondly, consider investing in assets that are likely to appreciate in value over time, such as stocks, real estate, or gold. However, it's important to note that investing always comes with a level of risk, so it's important to research and seek professional advice before making any investment decisions. Consider starting a side hustle or freelancing to earn extra income during the recession. This could be anything from offering services such as graphic design or writing, to renting out a spare room on Airbnb. It's important to find a niche that you're passionate about and that has a demand in the market, and to approach it with a mindset of hard work and perseverance. It's also worth mentioning that during a recession, some industries may be more resilient than others. For example, industries such as healthcare, education, and essential goods and services tend to be more recession-proof than industries such as hospitality and luxury goods. Therefore, it may be wise to consider shifting your career or business focus to a more recession-resistant industry. Additionally, during a recession, it's important to maintain good credit and avoid taking on too much debt. This means making timely payments on existing debts, avoiding taking out high-interest loans, and keeping credit card balances low. Maintaining good credit will help you access loans or credit lines if needed, and it can also improve your overall financial health.
Second approach is where you identify a great compounder that because of people not willing to look at the right time horizon, then you can look around the corner. You could pay what would be either a reasonable or even an expensive looking price and end up with a great result. I think you could have paid any multiple for Microsoft when it went public in the 80s, almost any multiple for Walmart when it went public in the 70s, and you would have still done extremely well. So if we have a crystal ball that can tell us what a company might look like 50 years from now, 30 years from now, then, We could buy something at $1 billion market cap and it might become 200 billion.
It's important to stay positive and maintain a long-term perspective. Recessions are a normal part of the economic cycle, and they tend to be temporary. By focusing on saving, investing wisely, and looking for opportunities to increase your income, you can weather the storm and come out on the other side with a stronger financial foundation.
Well, I think it's more like it does seem like we're headed into a recession here in 2023. The magnitude of that recession is debatable, but I think it's at least a light to moderate recession. Potentially, it's on the order of 2009. So I think it's wise to kind of like prepare for the worst, hope for the best, prepare for the worst. Don't get too adventurous. Like watch out for margin debt. Like I would really advise people to not have margin debt in a volatile stock market, and from a cash standpoint, keep powder dry. You can get some pretty extreme things happening in a down market.
Another important consideration during a recession is to be prepared for unexpected events. This means having an emergency fund that can cover at least 3 to 6 months of living expenses. Having an emergency fund can help you avoid relying on high-interest debt or liquidating investments in times of financial need. It's also important to take advantage of any available government or community resources that may be available during a recession. This could include unemployment benefits, food assistance programs, or small business loans. These resources can provide temporary relief during a recession and help you stay afloat until the economy recovers.
Let's talk a little bit about the fact that the market's down almost 800 points this morning.
Yeah.
Concern for you?
Well, no, that's good for us, actually. We're a net buyer of stocks over time. And just like being a net buyer of food, I expect to buy food the rest of my life, and I hope that food goes down in price tomorrow. So when stocks are down, we're going to be buying on balance. And who wouldn't rather buy it, at a lower price than a higher price? People are really strange on that. I mean, because most of your listeners are savers, and that means they'll be net buyers, and they should want the stock market to go down. They should want to buy at a lower price, but they have that feeling that they just feel better when stocks are going up. If you worry about corrections, you shouldn't own stocks. I mean, if you can't take your stock going down, it's going to go down sometime if you own a stock, so why worry about it? I mean, the point is to buy something that you like at a price you like, and then hold it for 20 years. And you should not look at it day to day. If you bought a farm or apartment house, you wouldn't get a quote on it every day or every week or every month. So it's a terrible mistake to think of stocks as something that bob up and down, and that you should pay attention to those bobs up and down.